If I told you you could turn $200 a month into $340,000 without picking a single stock and without timing the market and without being good at investing, you'd probably think I was exaggerating, but I'm not. This is the real math on how the wealthy build their wealth quietly in the background. And today, I'm going to give you the exact blueprint on how to do that, show you the stuff that schools never taught us, and the stuff I wish someone taught me when I was younger. So let's build a foundation in a way that's simple, practical, and actually makes sense. Welcome back to the channel. If you're new here, my name is Martin. On this channel, I break down money, investing, and financial freedom in a way that is simple and actually makes sense. Today, we're diving into something that every beginner needs to know, but somehow schools never show us, and this is actually how to start investing. Today, we're going to cover what stocks actually are, the difference between index funds and ETFs, how to start investing with as little as $50 a week, the biggest beginner mistakes to avoid, and the exact blueprint you can follow to start building wealth today. This is a video I wish someone forced me to watch when I was 18 years old. So let's get into it. Look, I wasn't born around money. I didn't grow up around investing. Nobody sat me down and said, hey, here's how you actually build wealth. And because of that, I made some mistakes that a lot of people make. Saving but never investing, trying to pick random stocks, thinking you need thousands to start, and believing that investing was risky. I wish someone had handed me a simple, clear roadmap. So today I'm giving you the roadmap I never had. So let's start with something that nobody explains clearly. What are stocks? A stock is not a lottery ticket. It's not a gamble. It's ownership. For example, when you buy one share of Apple, you literally own a microscopic piece of that company. It's tiny, but it's still ownership. And there are two ways that you make money. You make money when the price goes up, when the company grows, and with dividends. Some companies literally mail you a thank you check every quarter just for being an owner. So here's a quick example. If you invested $10,000 into Amazon's IPO in 1997, today that would be worth over $18 million. That's not luck, that's ownership with time. Now that you know what a stock is, here's the easiest way for beginners to invest. Index funds. This is a basket that copies the entire market. For example, the S&P 500 index fund, you instantly own 500 of the biggest companies in America with one click. ETFs, which is an exchange traded fund. It's the same basket idea. The only difference is they trade like a stock throughout the day, so they're a little bit more flexible. They are both cheap. They are both safe for beginners. They are simple. They are diversified, and they are proven. Here's the key statistic. 96% of professional fund managers lose to the S&P 500 after 15 years. In translation, when you invest in the whole market, you beat the pros. Trying to time the bottom of the market is impossible. Even the pros fail. And to solve that, you can do dollar cost averaging. You invest the same amount every week, every month, no matter what the market is doing. For example, if you invested $500 a month into the S&P 500 from January 2008 through 2025, including the 2008 crash, you would have turned $105,000 invested into $350,000 plus. Emotions are removed, consistency wins, you get more shares when the market is down and fewer when it's up. This is how regular people build their wealth. This is a big cheat code. Tax advantage accounts. With the Roth IRA, you put in after-tax money, and it grows 100% tax-free. And when you withdraw it, it's all tax-free. For example, if you invested $5,000 at the age of 22, and it grows on average at 8% until you're 65, you would have a total of $109,000 tax-free, With the same investment in a taxable account, you would have $85,000 after taxes. That's a $24,000 difference from doing nothing extra. With a 401k or a traditional IRA, you get the tax break up front, but you pay the taxes later. Use whichever one gives you the better tax advantage today. Here is the biggest cheat code, the Roth IRA. You put in after-tax money, and it grows 100% tax-free. And when you withdraw it, it is still tax-free. For example, $5,000 invested at the age of 22 with an average return of 8% until the age of 65 would be worth around $109,000 tax-free. And that same amount invested in a taxable account, that would be $85,000 after taxes. And that's a $24,000 difference for doing nothing extra. With the 401k or with an IRA, you get the tax break up front, but you pay the taxes later. Use whichever one gives you the better tax advantage today. You don't need to start with $1,000 or with $5,000. You can start with something as little as $50 a week or $7 a day, which is a cup of coffee. Here's an example of how to get started. You can open up a brokerage account with Fidelity, Vanguard, Schwab. They're all great. You would open up a Roth IRA if you're eligible. If not, you can use a regular brokerage. You'd buy one ETF, for example, VTI, which covers the total US stock market, or you can do VOO, which covers the S&P 500. You can set an auto invest for $50 every Monday and you're done. At historical 8 to 10% growth, $50 a week becomes $300,000 to $450,000 over 30 years. You can use apps like Acorn, Fidelity Go if you're starting literally with zero. Here's a couple of beginner mistakes to avoid: picking stocks too early, panic selling during crashes, checking your portfolio every day, investing money you need within 5 years, chasing Reddit and TikTok hot tips, and waiting for the perfect time to start. The perfect time was yesterday, and the second best time is today. Here's what I wish someone told me at 18. Time in the market beats timing the market. Missing the 10 best days in the market over 30 years cuts your return by almost more than 50%. The earlier you start, the easier life gets, even if you start small. And honestly, I wish someone told me this. Start today, stay consistent, and don't touch it. Let me give you a crazy example of compound interest. Person A invested $200 a month from the age of 19 to 27, but they stopped forever. Total invested was $19,200. Person B invests $200 a month from the age of 27 to 65, and their total invested is $91,200. At the age of 65, the 19-year-old, which is person A, ends up with more money by hundreds of thousands of dollars. How? It's time. That's the only difference. If I was starting today, I would make sure that I had an emergency fund set and established. I would start with 3 to 6 months of expenses in a high-yield savings account, and I would invest the remainder after that. You can try a one-fund portfolio. You can do the simplest strategy possible. Just buy VT, which is Vanguard Total World Stock ETF. You literally own every public company on earth. Reinvest Dividends. The S&P 500 with dividends reinvested since 1960 gives you 3 times more money. Fees matter more than you think. 0.03% versus 1% annual fees on $100,000 over 40 years, the difference is over $400,000. What to do when the market crashes? Repeat this. I'm buying shares on sale. I don't sell at a loss. I stick to the plan. This is normal. Just to recap, here is what we covered in 20 seconds. How to open a brokerage account, open a Roth IRA if you're eligible, buying VTI, VOO, or VT, automate weekly deposits, ignore the noise, and stay consistent. That's it. This can literally make you millions of dollars over time. If you made it this far, you're already ahead of 90% of the people your age. Don't just watch the video, take action. Start now. Your future self will thank you. Drop a comment and let me know, at what age did you start investing? I'd love to hear your story. And let me know if you want me to cover any topics mentioned in this video. I'll cover them more in depth. If you got value, hit the like button, subscribe, and share with someone who needs to hear it. I'll see you in the next one.